hit record for this call. If everybody could please mute your microphones, we're going to get this call started real quick. All right, guys, multiple things that we're going to do on this call. We're going to keep this call very short, so I am going to go a little bit fast. Try to take some notes, guys. This stuff is going to be pretty important, and all of the stuff we're going to give you guys, like we do on all the members' calls, you can use forever. This might contradict some of the stuff that you guys have learned before, and I can understand why, but if the stuff before wasn't working, then I encourage you guys to kind of keep up with what we're trying to say and kind of see how, you know, the contradictory information is not really working for you. All right. Now, as said in the chat, we're going to cover a few most important things. We're going to do mindset, which is psychology. We're going to do the account management, which is, are you taking care of your account as a whole? Are you just putting money in and just kind of hoping whatever happens, happens, taking it on a trade-by-trade basis? Or do you actually have a plan for your account? And are you watching your account and kind of keeping up with your account discipline? And number 3 is execution, which is one of the most important things about trading, which is actually taking the trade. Guys, watching the charts, keeping up with the charts, getting in the group chats, getting on the calls, none of that makes you money. Executing the trade and actually being in a trade is the only big fish in the week. So I want to kind of stress execution. And then 4 is trade management, which is different than account management. Account management is, are you taking care of the money in your account to make sure that you're not losing money over time, you're actually making money. Trade management is, you know, I'm going to show you guys a strategy, how to take your partial profits, when to take your partial profits, when to even move your stop loss and break even. I know, guys, in the signals chat, we do all this work for you. So realistically, if you take the trades, so we're still in this gold sell, guys. I know it took a very, very long time. It's really been consolidating for a while, but it just started to drop. So we're going to see a little bit of movement in gold, and it just kind of shows that patience pays. So with trade management specifically, with this pair, as soon as we're kind of 20 or 25 pips in profit, we can move our stop loss under our entry, and we're a risk-free trade. That means that worst case scenario, we lose $0, nothing. Worst case scenario. If you guys keep your stop loss up here and the price keeps going and it hits the stop loss, you will be out that money. So I'm trying to get you guys to understand the importance of moving your stop loss to break even. And for you guys that are new, that's pretty much just changing the number in the stop loss by editing the trade, and you can put in a new stop loss that's a little bit lower. It's under your entry. All right. We'll go into more detail about that later, guys. And if you guys do a one-on-one call, we actually go through some pretty decent amount of detail for this. So first things first, guys, is the mindset and the psychology. And I'm actually going to use the charts as an example here. Kind of show you guys what the mindset was today during trading and kind of how it can really fake a lot of traders out. So I am on the 15-minute chart, guys. All right. I don't usually get on the 15-minute chart, but I want to show you guys a lot of the movement that happened today. So we were in this actually, I'll go to the hour for this. I'm going to start from scratch, guys. I'm going to show you exactly how I drew this today. And this is very simple. I want you guys to pay attention to this. Whenever I do gold specifically, I always do this first. I go box off all of the areas of consolidation. Okay, the reason I do this, guys, is because price is only going one of 3 ways. It's the price is either going up, down, or sideways. So really the most important thing to find out as a trader is which direction is the price going. It's really, really that simple, guys. Like, you know, if it's, I just block off everywhere that's going sideways, and it becomes really obvious when the price is moving. Price moved right here for a nice bullish drive. Price moved right here for a nice bearish. Moved right here again. And now I think we are seeing right now the second drop. Do you guys see this? What happened was it's called a fake out breakout. So price fakes to the downside, retests, and then we have a continuation. All right. During this period right here, guys, a lot of people were panicking. And a lot of people were in my messages asking, you know, is price reversing? Is price going back up now? You know, price is back in this range. And I really want to remind everyone that, you know, you got to be really patient with a lot of pairs, guys. If something breaks out of a zone or a consolidation, you always want to wait for a retest. That's what I said in all of the markups. You got to be responsible and wait for the retest, because if you enter right here off the break, you're going to get caught in all of this drawdown. When the price comes back up to retest, you're going to be in negative for a long time, and it's really going to start to irritate you because this has been going on for maybe 4 or 5 hours. So you don't really want to be stuck in a position where, you know, you're just watching this negative trade. Every time you check, every 2 hours, the trade is still negative, still negative, still negative. So it kind of discourages you from being confident in the trade. So what you guys need to understand is retests are inevitable. If price breaks out of a zone or it breaks out of a shape, like a triangle, then it's going to have to retest that zone. Okay, so this is where we put our entries, and this is a low risk entry. We will put our sells right here. All right. The stop loss would be right above my moving average, so you would be risking maybe 10 or 15 pips, guys. So if you're using a 0.01, if you have a smaller account, then that would be $1.50 risk, and the downside potential is close to, I don't know, maybe $7 or $8. So that's the risk and reward ratio that we're working with, guys. Now, something I really wanted to talk about, because I was actually talking to a few people about this today. People were asking me, how much do I risk on any of your specific trades with my current account size? So I'm going to answer this. We usually recommend a 0.01 for every $100 in your account. All right. What that means is if you have $200, you can use 0.02s. The real rule of thumb, guys, that's to trade like a professional trader, is you only risk 2 to 3% of your account at a time. So for example, if you have a $100 account, 3% of that is $3. So you cannot risk more than $3 on any one trade. It just doesn't make sense. It's too big for your account size. Now, if you're a little bit more risk on, you don't really care, you know, you're down to risk a little bit more money, then shoot, you can go 5 or 10%. So 10% of $100, guys, is $10. So you can risk $10 on any single trade. Are we clear about this, guys? Just let me know in the chat. Just put a number in the chat or something if I'm making a little bit of sense with the pip count thing. Is everybody understanding? 0.01 for every 100 in your account. Awesome, 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 awesome. Okay, some people have less than $100 in their account. You're stuck with that 0.01. All right. Some people told me, yo, I saw this guy on Instagram or on Telegram, and he was throwing 0.05s on his $50 account, and he flipped his account double sideways, make it do a backflip. What about that, Roy? Guys, let me explain something to you. If you are willing and able and have accepted the fact that you can lose all the money in your account by any means, go reckless. You know, do whatever you want to do. But for those of you guys that actually care about being consistent and growing your account over time, guys, you can't be risking your account every day. With a $50 account or a $100 account, guys, if you throw a 0.05, you're going to get margin called if it goes the other way. You guys understand? So it's not that it's not possible to flip your account with a smaller account, guys. I'm just saying, is it worth it? Do you want to keep going back to zero and starting over and going back to zero and starting over, which a lot of people do? People get to the mentality, the less money they have in their account, they get to the, oh, fuck it mentality. So I already lost half my account. I might as well just start risking more. That's really how people think, guys. And I want you guys to sort of understand, the less money that you have in your account, the more you got to be careful. I was on a call with one of the members, and he was telling me that he actually puts a percentage aside of his income to refund his account in case it happens. And so I told him, there's a really important quote, guys, by Alexander the Great. It said, if you want to take the island, burn your ships. What that means is if you have a team, if you have an army, and you want to go take over the island, and you give them a way out, like if we start losing, we can hop back on the ship and just leave. You give them that way out, guys, they're going to take the easy way every single time. If you want to take the island, burn your ships. So don't give yourself that extra 10% of your income so you can possibly refund your account. Okay? If you're low on your account, get more disciplined, take less trades, watch the amount of pips that you're risking, and grow your account back up slowly, guys. That's really the only way. I've gone through points where I've refunded like 10 accounts. This is like 6 months into trading. I had refunded so many accounts. I actually got on a call with a mentor of mine, and he ripped me a new one, guys. He was like, if you keep giving yourself an extra, you know, however many dollars to keep refunding your account, how are you going to watch it? How are you going to get better? You guys see what I'm trying to get at? So keep that in mind next time you start losing a little bit of money. That is not the time to start slacking or just start putting the account away. That's when you really, really focus and really, really start to make a change. And those are the week by week shifts that you see people. 1 week they're not making money, the other week they're making money. What the hell changed? It's when you lose. Are you going back and watching the charts and looking at the charts, and are you at least, you know, seeing what's going on? And the lower that your account gets, are you getting more disciplined or less disciplined? These are very important things to keep track of, guys. The second I want to talk to you guys about is execution. All right, execution is really important because a lot of people, they look at our setups and they're like, well, we don't know when to enter. I saw the entry price, but I don't really know. Is it going to come back to the entry price? So I'll tell you guys something. If we call, let's say, a sell right here, and I'm going to give you guys the actual numbers just so this makes sense. At the 1275, okay, let's say we call a sell right here at 1275. And let's say price climbs up. Let's say price climbs up a little bit higher, like up here. Then your precise entry would be when price goes back to the number that we called. Is that clear, guys? If we call the price at 1275 and you go onto the chart and the price is at 1276, don't just enter because you're late because you saw it in the chat. Wait until it goes back to the entry, guys. And I know that's just a little bit more work, but all it is just checking the price. So if we call a sell at 1275, just see where price is. See if price is respecting that. If price is at 1276, wait. Because if it keeps going up on you, then at least you're safe. At least you're safe from taking a bad trade. I had a few people take the GJ trade a little bit late earlier. And so when they were in drawdown, they thought that we were in a negative trade. But the trade ended up going back our way. So that's kind of what I want you guys to understand. All right, something about execution, guys. Don't just jump in the trade because you saw it in the chat. Just at least look at the chart and see if the price is still there. Or just look at the time that we sent the trade and see if it's not too far from when you're checking the chat, and then you can still enter the trade. So that's just a quick thing for you guys for our chat. Okay, next thing we want to go through is account management. Account management, guys, write this down. 10%, or sorry, 5 to 10% of your total account equity at a time. 5 to 10% of your total account equity at a time. So if you have $100, you can't be risking more than $5 or $10 total on all of your trades. If you have 2 or 3 trades open, whatever it is, the sum of all the risk can't be higher than 10. Because worst case scenario, you lose all 3 trades. You don't want to risk more than 10% of your account. All right? Because let's say even if you lose those 3, so what? If it's only $10, guys, you try again tomorrow. You can double up. You feel me? You can make that money back and you can make profit. So it's always better to mitigate your risk. Now, guys, I'm going to go through a few of the setups that we posted today, show you guys what happened to them, show you guys where kind of where we're at. So this is GJ. We called this one yesterday. We called an entry down here. All right. We called a buy entry here. We got stuck in a lot of drawdown, guys, overnight during the London session. This is a very, very important shape that we trade, guys. It's a W formation. So we see a double bottom. We see a double bottom right here, guys, a double bottom, and there's a wick rejection, 3 wick rejections. This is called a 3-pin pattern. 3-pin pattern with a doji on the bottom, guys, or an inverted hammer, whatever you guys want to call this, and a double bottom. So this W gave us a buy signal down here, okay? I wanted to wait. I wanted to wait to see if it retested. Okay, this was at 6 in the morning. By the time the session opened, we called a buy right here, okay? Our newest buy, guys, is down here at the 145 at this black line. This is the entry zone. Our stop loss is down here at this black line, which is where the last low is. And our take profit is up here where the previous high is. So this is a pretty straightforward setup, guys. We have let me grab this. We had price break above, come back down to retest this black line, which is the top of this zone, the previous highs. You guys can see that? Came down to retest, kind of scared us a little bit, and now it's climbing above. So I'm pretty confident in this buy, guys. The moving averages that we use to kind of signify a change in momentum have crossed down here, and they haven't crossed back negative, bearish. So we're going to keep expecting this to keep climbing up to our take profit, guys. And we are in this trade, and you know, this is the entry right here. So I'll tell you guys, this is where I would put my, this is where I would move my stop loss to break even right here. There's already a line there. I don't know what I'm doing. So let me put an actual, let me see what number this is. Price label. So 140.78. So sort of halfway to the first take profit, guys. We can take partials or we can move our stop loss to break even. And that means that now we're in a risk-free trade. We can go to sleep. It doesn't really matter what happens because we can't even lose any money on the trade. Beautiful. Maybe a little bit further up here, guys, you can take partial profits. So you can take some money off the table. So here's the reason we take partial profits, guys. If the trade goes the opposite direction of us in our sleep, we at least take money off the table. Let's say I'm supposed to make $10 off the trade. It gets halfway through, I take $5 off the table. And I put my stop and break even. When I go to sleep, if the trade reverses, I go to $0. I go to $0 on the active trade, but I still took out $5 in my account. Okay? So the difference is, guys, if you at least take half away, or if you at least take a percentage of the profits away, you still walk away with something at all times. So whether you win or lose the trade, you make money. I need you guys to understand this. Whether you win or lose the trade, like whether it goes up or down in your direction, you still got to make money. Okay, how does that happen? It happens by making sure that you take profits along the way. So right here, guys, once price gets up here, we're going to take some money on this side. If worst case scenario happens and the price just shoots back down and it hits a stop loss and break even, we lose $0 and we still have $5 in the account. Is this clear, guys? Is taking partial profits, does that kind of make sense for why it's so important to take them? Alrighty. So we're seeing gold doing some really nice rejection, guys. So I don't think we have to worry about this trade. Once it crosses the moving average, I think we're kind of clear on, we're sort of clear as soon as this thing breaks. Let me see if I can find some more zones. Probably be right here. Alrighty. And guys, this is how I find these zones. Just keep this in mind. Keep this on mind. This is one of the most important things about trading that people neglect. You guys see this? You guys see where the price broke and retested? It's the area of resistance. Broke, retested like a force field. It just shot down. When price came back up here, you guys see how it retested right here? It came up like a force field, came back down. What this means is, guys, sellers, maybe a bank or a large financial institution, they got huge money sitting right here. They know that the second that price gets here, they're about to sell the shit out of it. You know what I'm saying? Because they were very bearish on this. When price broke back above and they bought it back right here, this shows that this line, this black line, the 1272.5 is very important for people with big money. Does that make sense, guys? We're just trying to figure out where the big money is so we can trade with it. A lot of people, they'll take trades in random places on the chart, and little do they know that there's actually big money playing against them. And so they get stuck in a key institutional zone, and somebody does a huge buy up at the bottom. And so you kind of get stuck in that. So watch out for these key institutional zones where support turns resistance, and then you can kind of just trade off those because price will always come back to these zones, guys. And I want you guys to notice one thing about gold. Watch how all of the zones are equidistant from each other. Equidistant means that they're equal distance. So the distance from this one to this one is the same as the distance from this one to this one. How beautiful is that, guys? The top of this, the very middle of the range where support meets resistance, and the very bottom of the range are all equidistant. So that gives me a really good zone to play in, guys, a really, really good zone to sort of play with. Okay, so we're looking at this trade. GJ is moving. We're all in profit. Yes, sir. All right, so I call this Euro AUD, guys. This is a little bit confusing, and I don't want to confuse you guys, but this is something called a harmonic pattern. And I'm sure you guys have either seen these or heard of these. A harmonic pattern is nothing more than a W that we measure using this tool. Okay, so you guys know we trade W's. We trade W's and we trade M's. But these are nothing more than harmonics, guys. If I take this tool, here's how you do it with the W. You guys see? The way that harmonics work, guys, is if it's a W, that means it's a sell at the top. And the take profit is usually the B point right here. It's usually this point. So that's what I was seeing here. I was seeing this down to down here. All right, we're gonna call this if it starts to reject, guys, because this is what's happening right now. This is called a teacup, where price moves momentum down a certain way, and then it goes up in the exact same time, exact same volume, the opposite direction. Okay, it's a little bit of manipulation going on here. So we'll see, guys. If it breaks this high, we're gonna absolutely ditch the sell. But if it rejects off this high, guys, this is probably where we're gonna be calling our sell, somewhere up here. And look at where the take profit is, guys. We have our 50 moving average right here to catch us. We have the B point of the harmonic, which I said was a target zone. And for my Fibonacci lovers, Look at where the zone is, guys. The 61.8 retracement down here. If this thing sells, this is our target. This yellow zone is our target. So we're going to keep watching this sell, and we'll keep you guys updated. GN is doing the same exact thing that GJ is doing, guys. Remember, we had this wedge forming, and then we had a break of the wedge. So we had a breakout of the wedge, break, retest, breakout of the wedge. It came down to retest the wedge, and now we have a shot up. So this thing will likely do this. Alrighty? If you guys want to take a screenshot of this, you can. This is the area to watch. 9545. 9545, guys. If it breaks below, expect it to range. If it bounces, guys, I would buy this. I would buy GBP NZD. All right, Euro NZD, we still have this. We still have this harmonic, guys. And you guys are going to start to see the harmonics. You start to see them instantly, guys. Whenever you see an M or a W, it's always in your best interest to draw it out because you never know what's going to happen. With this, we had a sell-off. Okay, it's going to consolidate. This is the moment of truth for Euro NZD. Because now we're at the previous session highs, all right? If we retest and break above, then, we're going to ditch this sell idea. But if we start rejecting here, then we're going to be looking for this to sell back down, all right? And we will post these entries, guys. I'm going to keep an eye on these. We're going to post these entries, so don't even worry about this. Last thing, guys, anybody have a specific pair they would like us to share? Slim, I got you. What is your question specifically? I got you. Whatever you need. All right, guys. Let's go over CAD CHF. We had this. Wow. Let's measure this retracement real quick. That's beautiful. We had the 618 off the 71 rejection, guys. You guys see where this is? The 71% Fibonacci. We had a huge break, huge retest, and now we have this bullish momentum up. So we're likely to make new highs, guys, because of the break and retest. And, let's see if we can get an equal size rejection. So far it's respecting these zones. Yeah, we'll know once it crosses these lines, guys. So we're expecting it to keep dancing within these levels, guys. Okay, we're gonna keep dancing above these levels. If you do wish to enter, I would only enter on a retest, guys. Break, retest. Buy at the bottom of the lines, guys. This is something I want you guys to pay attention to. If you guys started to doze off on this call, pay attention to this one thing. There's only one thing I can tell you on this call. When you are in a range or you have these ranges drawn, do not buy at the top. Okay, this is what this means. A lot of people will wait for this to break out of the line, right? As soon as it breaks out of the line, they're ready for the buy. What I want you guys to do is wait for a retest. Okay, wait for a retest before it comes up. This had a retest. This had a retest, guys. And so we would have bought right here, and then you would have had a very, very tight stop loss right below this line. But what you don't want to do, guys, is you don't want to buy at these black lines, okay? You don't want to buy at the breakout. If this thing breaks above and it comes back down to retest, this is where you want to buy, okay? If this thing comes up and retest the last black line, guys, this is where you want to sell. You want to sell up here. Most people get excited and they want to buy the breakout. And then they get trashed. They take their money and then it goes their way. But they're not in the trade. Why? Because they're entering too early and they're entering too sporadically. You see it break the last highs, guys. Wait for a clean break close above here. This candle closed, so this is a fake out, guys. You want to see a clean candles close above here. And then if it comes back down to retrace, guys, you want to buy at the bottom of the retracement. If it doesn't retrace, guys, if it keeps going up, just leave it. Really just leave it. Unless you're a more experienced trader, you're willing to accept the risk and you're willing to understand that it could go the other way, I would just say leave it. Buy on a retest. It's the safest thing that you can do. Let's see if anybody threw out some pairs for us. Where's your take profit and stop loss at? So for this, for example, let me give you an example. If you entered up here, if this thing comes up here and you waited for a retest, let's say the retest came back pretty deep and it came up. Let me draw this. Let me see where this is. Long position. All right. This middle line, guys, is where you would put your entry. Your stop loss would be right below this black line, right below it. And look, you guys can see it's 11 pips, literally nothing. That's $1.10 at a micro, or $11 at a 0.1. All right. And, you know, take profit, just right now, guys, just the first take profits that we're watching is already 50 pips. You guys can see where how this looks right here. Okay, we're going to go to the previous highs first. We'll see if it rejects back down. But until then, our target is the previous highs. Maybe, guys, I'm even feeling the 7.6 psychological number. 7.6 right here. Key psychological number, 0.76 for a reversal. All right, so we'll keep an eye out on this trade, guys. If we see an entry right here, if we see an entry at the break and retest, guys, we'll go ahead and send it out for you guys. No worries. Oh, baby. Guys, I hope you're loaded up on gold. I hope you are in this. I hope you guys are in this. Euro USD, way too messy, guys. I'm not messing with the euros right now because of the whole Brexit situation. This is really confusing, guys. We have break and retest. Let me show you guys what news does. Theresa May, who is the Prime Minister of England, went and spoke today about the issues dealing with Europe because they're trying to secede from Europe. Her plan was the same plan that she's been throwing out for months, guys. Nobody is happy. So a lot of crazy shit happened. Price shot up as soon as she announced that she was making an announcement, okay? Shut up, break and retest. Okay, we had an entry here. I don't know if I called this, but I entered this trade here. Strong bullish momentum, guys. And then the news came. I was taking profits. It's when we said take partials yesterday on GJ. And then right back down. Now it's forming a head and shoulders. If you guys know what a head and shoulders is, this is what a head and shoulders is. Head and shoulders is we have a left shoulder, head, right shoulder. And the way that these normally behave is a break, retest of the neckline, and drop. So we'll keep an eye out for this, guys. We'll keep an eye out for this. This retest right here, if this is a retest for more bullish momentum, we will know. If it keeps crossing down through this area, guys, and it crosses the moving average, we're going to be selling this joint. So there's a lot of moves to be had tonight, guys. The middle of the week reversals are going to be huge moneymaker for us. And do not forget that there is a lot of news tomorrow. It's a lot of GBP news, and there's a lot of, there's actually, the US is having their own news. It's the FOMC. So the Federal Open Market Committee, the one that creates all of the laws for the interest rates in America, they're going to be having a meeting tomorrow about monetary policy. So whenever they release, you know, the writings from everything they discussed inside of the meeting, price usually goes one way or another. So we'll be keeping track of that, guys. So far, my idea is bearish. All right. So I'm expecting the DXY to kind of drop back down. Do this. Down here, back up here. The last call that we had, guys, we actually had this drawn out. So price was still dropping. And so we said that when it comes back to retest this previous low, a lot of people are going to start buying the dollar back up because you're going to start to see some strength. And that's exactly what happened, guys. This was a news event, completely drove us back into a new range. And so now what we can see, guys, a little bit of retracement and continuation, which means that gold will drop if the dollar keeps going up. Alrighty, guys, that's it for the call. I'm sorry if this thing took so long, guys. I know I talk a lot during the calls. I really genuinely hope that you guys gain some value from this. Remember, guys, our entire mission here at Chart Addicts is to give a man a fish. You can teach him for a day, but if you teach that man to fish, you can feed him and his family for a lifetime, which is very important, guys. We want to make sure you guys are getting this down. If you haven't already scheduled a call with us, guys, I highly recommend it. All right? Really want you guys getting this knowledge, being like, hey, you know, these are my problems during trading, and how can you help me specifically? You know, this is my account size. This is what my account looks like. These are the types of trades I take during the day. This is how many trades I take during the day. And me and Professor O will assess this for you, and we can kind of help you figure out where your problem trading is. Usually, guys, it's just a lack of awareness. As soon as we tell you, hey, you're taking 30 trades a day, 20 trades a day, cut that out. Take 12 trades maximum. Then things will start to improve for you on a week-by-week basis, guys, and you don't have to go through 5 more months of excruciating losing money. I hope you guys enjoyed the call. God bless you guys. It's a Tuesday. We're still killing it for the week. Keep an eye out for the rest of the setups, guys. I really appreciate you guys hopping on. Thank you. And we're going to be posting this on YouTube for you guys. So make sure you stay tuned. I want Professor O!
Okay, my God. Appreciate you, man. Appreciate you. Some value.
Come on now. All right, I'm about to get off this call, fam. I'm about to go and send some charts in the chat. You feel what I'm saying?
All right, bet.
Let's get it. Oh, if you want to get on a call with me, just go ahead and send me a link.